All right, happy Sunday, everybody. Let's jump into the focus list. Do it a little bit differently. We won't too much talk about a bunch of setups or anything. Let's focus on a couple of setups here, and I'll give you a little bit of an insight into what goes through my mind when I'm looking for an opportunity and how I kind of structure the trades. So, big picture thinking here. All the indexes are squeezing, the sectors are squeezing, the individual stocks, of course. They're squeezing away. So over the next 2 or so weeks, I'm looking for the market to fire the squeezes to the upside, looking for a move into brand new all-time highs, 2 to 3 plus ATR to the upside. So the Qs look good here structurally. Good looking daily squeeze. We got the stacked DMAs. SPY looks the same. The Dow looks the same. So with the Qs here, we'll focus on those today for today's discussion. You could do just a trade here on the Qs, which we'll talk about. But as far as the individual stocks go, you want to think in terms of probabilities. So something like a Facebook. While I loved Facebook a few weeks ago, this isn't the best entry right now. It's already made the high probability move from the 21 to about 2 or so ATR to the upside. So you could pick up some Facebook on a dip, I would think. But a little too extended here for an entry, I think. And then Google, we got the daily squeeze, so we're taking our position over here. And while this one hasn't quite gone 2 plus ATR, it's not at the buy zone. The buy zone's right there at the 21. So even if we're potentially confident, the Qs are going to go higher here. So should the Qs go higher, tech stocks are going with them. If you're going to look to benefit from that momentum in tech, you want to focus on a good entry. So for Microsoft, here's a good example of my go-to setup. You got the squeeze, histograms going positive, you got stacked DMAs. However, unlike Google or Facebook, it hasn't made that move into 2 to 3 ATR yet. So I like the structure. It's at the buy zone. So that's the kind of setup I want to focus on. Now, as far as the option strategy, this is a personal preference, right? You can buy calls, you can do a debit spread. I like the credit spreads. So, what I'm trying to do is marry probabilities. Based on the structure of the setup, I'm really confident over the next 2 to 3 weeks, Microsoft could go as high as 260 plus. Based on the setup, I'm confident of that. But to put the probabilities in my favor a little bit more with the credit spread, I like to place a bet that, I think Microsoft's going higher, but at the very least, it should hold above its 21 EMA as support. So with that being said, I usually like to give the trades 25, 30 or so days to expiration. So, we can look at June 25th, 25 days out, and where you're typically going to get that nice 1.5 to 1, 2 to 1 risk reward ratio is with an at the money put credit spread. So, you can sell the 247.5 put, buy the 242.5, and at $1.80 a credit, one contract, you're risking $300 to make just about 200. So that's a risk reward I'm comfortable with. And think of the bet you're placing here. You got a short strike at 247.5, so pretty much. We found a good looking squeeze, a good looking trend. You got the timing component here with the indexes squeezing. So based on the structure, I'm really confident Microsoft can make a move higher. With that being said, I'm even more confident that Microsoft should hold up above the 21. So if you sell that put credit spread and you sell those 247.5 short strikes, though we're looking for the move into 260 plus, the bet you're really placing is that heading into expiration, our buddy Microsoft here is just going to be holding above that short strike at 247.5. So, when you can marry those probabilities, high probability setup with a high probability strategy, that's where I've been able to create some consistency. So, that looks pretty good there. It's a good risk reward. And keep in mind with the credit spreads, you're looking for that healthy balance of, leaning into the probabilities of it, but still getting a good bang for your buck. So what I mean is an extreme example. We could do a credit spread and sell the 240s. We could buy the 235s. Now here's a really high probability trade. Based on the structure and the market timing, those puts based on the math here, they got about a 25% chance of having any value come expiration. So, call it an 80% chance they're going to go to zero. High probability trade, but you're risking $4,000 to make 700. So it's such a high probability trade, you're not getting a great risk for a good risk reward. So basically what I do is I try to find a setup that looks like a Microsoft, and then I'm going to sell the credit spread. And typically, my usual trade, I'm going to go as far out the money as possible while still getting at least a 2 to 1 risk reward ratio. And for different stocks and different time till expiration, you're going to get different premium. So for some stocks, you either go a little bit further out the money, but to me, that's basically the mindset. it comes down to the setup first. I need that squeeze. It's got to meet all my criteria. But once I find something that looks like a Microsoft here, then I want to put on the credit spread and kind of marry those probabilities. So, that's really attractive heading into this week. Keep in mind, this isn't trade advice. I'm just kind of talking out loud here. Though if you're in the simpler options room and I send out the alert, it's a bit of a different story. So I'm going to be looking at something like a Microsoft. What is also interesting here is just doing the trade on the index itself. So, it kind of begins and ends the structure of the indexes. The Qs here, they got the good-looking daily squeeze. I think they're gearing up for a move into new highs. So potentially, you kind of simplify things. You do the trade on either the QQQ or you could do it on the NDX. I would say for smaller accounts, focus on the QQQ for quote-unquote bigger accounts. A little bit more premium over here in the NDX. So, same thought process. I'm going to be looking for 25, 30 days to expiration. And then, I'm looking for that at least 2-to-1 risk-reward ratio on the credit spread. So let's not scroll ourselves to death here. So how about this, right? You go back to the chart, looking for a move into, call it 14,200. And here's your 21 EMA around 13,600. Round up a little bit. So I would kind of say, hey, let me start there. Let me, sell the 13,600 strike. I'll go $50 wide. $50 wide here, and let's see, 1745 a credit. That's my trade right there. I might not go 32,000 bucks deep, but something a little bit more appropriate here, say 5 contracts. Yeah, all day long. That's my bread and butter. That kind of setup with a trade like this, where I'm confident this bad boy is going to make a move into 2 to 3 plus ATR, but let me just at least place a bet it's going to hold above its 21 with short strikes at 13,600. So, even on one contract here, and like I said, you can do the Qs for a smaller account, but on uno contracto, you're risking 3,200 to make about 1,700. So that's my bread and butter right there. I take this mindset to pretty much anything I'm going to trade. So with Caterpillar, it begins and ends at the structure of the setup, and now I have that short strike credit spread at 235. With Google, it all comes down to the setup, the structure of the squeeze, at the buy zone, stacked EMAs, all the good jazz. And with Google here, I sold short strikes at 22.90. I'm confident Google's going to 34.30 plus, so I'm way more confident it's at least going to hold above 22.90. That's the thought process. So, high probability setup with the squeeze, and especially with the, my specific list of criteria, it's a high probability setup in terms of, being able to identify that moment in time where we're getting ready for that bigger than average move, 2 to 3 plus ATRs to the upside. So high probability setup, and then with the put credit spread, you're utilizing a high probability strategy. So with all the squeezes here in the market right now, that's what I'm going to be focusing on per usual. Looking for good structured squeezes, looking to sell my spreads, and then I throw my feet up and recline and relax, and you wait to see how the squeezes fire. So I'm thinking the next few weeks should be pretty interesting. Got my position in Google, got my position in Caterpillar, but the Microsoft trade idea and the NDX trade idea, those are both pretty attractive. They're tickling my fancy. So, we'll see how the market opens here as we go into Tuesday morning, but you find yourself a good squeeze, you take your weapon of choice. For me, the weapon of choice is the put credit spread, and then you hang on tight as long as it holds structure. And for those of you asking, what I mean by hold structure is the squeeze is a big buildup of energy. It's a bunch of back and forth +1, -1 ATR moves. So with Caterpillar is actually a good example. Taking my position over here, she's not doing much, but it's holding structure. It's still within +1, -1. It's behaving like a squeeze, and at some point, you're looking for a +2, +3 move once all that energy gets released. So that's what I'm focusing on right now. Same thing as always. Good-looking squeezes, selling my spreads, but you got squeezes everywhere right now. So next few weeks should be interesting. So let me know in the comments what y'all are going to focus on. If you got any positions open, if there's anything you think I might like here based on the kind of setups I'm into, put it on down there in the comments below. But if you haven't already, I would appreciate you subscribing. You can subscribe to the newsletter as well. And then we'll be, let's see. I will see y'all Wednesday morning for some pre-market prep. So till then, enjoy the long weekend, and I'll talk to you soon. Peace out.